Hello, I'm Rhema Soegiantoro, IPMI International Business School, batch 2019, and I want to review about what we learned about this third semester on managerial accounting. So there are 5 weeks in total. The first week, we review the financial accounting in the last semester. It's about the financial statement and financial analysis, such as of profitability ratio, efficiency ratio, quick ratio, and so on. And then we also review of corporate finance. There are 4 cornerstones of corporate finance. The first one is the core of value. The second one is the conservation of value. The third one is expectation treadmill, and the last one is best owner principle. And then we also learn about the time value of the money. We learn how to calculate the future value and the present value of money. And the last thing we learn about the value creation. It's basically where the present value of the benefit is higher than the cost. And move to the second week. We learn about the difference between financial accounting and then managerial accounting. Financial accounting is used by external parties, and it's based on historical data, and it's structured usually by GAAP. Well, managerial accounting, on the other hand, is used for internal usage, and it talks about the future and what should the manager do to the company, and then it's more flexible and doesn't have like the structure. And then we learn about the cost behavior. There are 3 types of cost. The first one is the fixed cost, the second one is the variable cost, and then the third one is semi-variable. Fixed cost is where no matter how much volume used, the cost is still fixed. For example, the building, equipment, and then the variable cost is the cost that follows the volume. And then we also learn the cost, volume, and price. We learn how to calculate BP and contribution margin. And then lastly, we learn about the cost behavior analysis. There are 4 types. The first one is judgment. The second one is using scatter plot. The third one is using high-low analysis, and the last one is linear regression. And then move to the week 3. We learn about the full costing. So full costing is the amount of direct cost plus indirect cost. Direct cost consists of direct materials, direct labor, and overhead costs, while the indirect cost can as a marketing, R&D, and administration. We also learned about the difference between product cost and period cost. Product cost is a cost that becomes part of cost of goods sold, while the period cost is the expense in a period consumed. We also learn about the costing system. There are 2 types. The first one is the job order, and the second one is the process costing. Move to the week 4. We learn about the standard cost. There are 3 types of how we can set the standard. The first one, for direct material standard, we calculate it by a price standard and quantity standard. The second one is direct labor standard. There is a rate standard and a time standard. And for the overhead standard, we have a rate standard and activity standard. In the week 4, we also learn a little bit about the variance analysis. It's basically the difference between the actual and it's a difference between the actual quantity or actual price with the standard quantity or standard price. We learn about the 2 variants, the price variance and quantity variance. Price variance calculated by actual quantity times actual price minus actual quantity minus standard price, and the quantity variance calculated by actual quantity times standard price minus standard quantity times standard price. And then lastly, in the week 6, we learn about the variance. There are 2 types of variance, unfavorable variance and favorable variance. But unfavorable variance doesn't always mean bad, and favorable variance doesn't always mean good, because if they use like a low quality, then it's favorable variance, but it's not good for the company. And we also learn about the idle capacity variance and net income variance, which consists of marketing variance, general administration variance, and production variance. Production variance itself consists of 3 variants. The first one is direct materials variance, direct labor direct labor variance, and the last one is overhead variance. Yes, so that's all for what I learned from this past semester on managerial accounting. Thank you so much for listening.